Joining me now, Alcoa CEO William Oplinger. Bill, it's great to have you back on. Thanks for joining me.
Morgan, thanks for having me on again. I appreciate it.
So I want to start right there with what you saw in Q1, stronger than expected results. One of the things that got my attention is the fact that you are maintaining your 2025 production and shipment guidance. It's unchanged for both aluminum and alumina, despite the economic uncertainty. Why?
Well, let's start with the first quarter. We had a strong first quarter. We always start as a manufacturing company with safety, and we improved the overall safety performance for the company. We delivered on our production and our shipments that we anticipated in the quarter. We dropped higher prices to the bottom line, and we repositioned debt a little bit in the first quarter also. So as we look out into the second quarter, our order books continue to remain strong, and our belief is that that will continue. And so we've maintained our full year guidance. We'll clearly reevaluate that at the end of the second quarter. But as of right now, we feel confident that we can hit that full year guidance.
On one hand, you're seeing higher aluminum and alumina prices. On the other, so much of your smelting activity is outside of the U.S., much of it that funnels into the U.S. coming from Canada, and we've seen these tariffs implemented. How are you navigating it?
So just to be clear, we had high prices in the first quarter. Since the beginning of April, we have seen a sharp decline in both alumina and aluminum prices. And that is really, in our view, based on the fact that there's a lot of uncertainty in the market. The overall economic sentiment has turned downward. And just since the beginning of April, that has driven aluminum and alumina prices lower. How we manage is how we always manage. We have a globally competitive system. We've got plants around the world. We're looking at opportunities to where we ship metal, where we ship alumina to maximize profitability. We'll work through the new tariff system to try to deliver profitability to our investors.
What would it take for you to stand up more smelting and more manufacturing here in the U.S.?
It's going to take a lot of time and a lot of money. And if I just give you some background on the overall aluminum industry, we use within the United States around 4 million metric tons. We import 2.7 million metric tons of that from Canada. So we have a massive import of aluminum from Canada. To answer your question directly, to reshore back into the United States, it will take anywhere between 7 to 10 years to build an aluminum smelter. It's billions of dollars, and the amount of electricity that would be used is a massive burden to the United States. So reshoring will take time if it occurs. In the meantime, we believe probably the most effective way for our downstream customers to continue to be successful is to import aluminum specifically from Canada.
Why specifically from Canada? Because you expect we get to some sort of bigger and more meaningful deal with Canada?
Canada has had a successful aluminum industry for decades. We have our supply chains that are tied. So many of our customers are tied directly to our smelters in Canada and other companies' smelters in Canada. So the supply chains are already exist, and we believe it makes the most sense to continue on there.